Hello everyone. Today I will be sharing my thoughts on the book Rich Dad Poor Dad, written by Robert Kiyosaki. The book tells the story of two fathers. Author's biological father, to whom author referred as a poor dad, who was well educated but struggled financially, and author's best friend's father, to whom author referred as a rich dad, who was high school dropout but successful entrepreneur, who taught author the principle of financial management. The book emphasizes on the importance of financial literacy and how it can play a vital role in achieving financial freedom. The main message of the book is that academic education does not always prepare us for financial success. Instead, Rich Dad believes financial literacy and the ability to accumulate assets to create a wealth is the key factor in achieving financial freedom. The book is divided into several chapters, each focusing on specific topics such as importance of assets over liabilities, significance of financial literacy, and the ability to take risk to achieve financial success. For example, what does mean by assets? So asset in general means the anything that have a current or future economic value to a business. For example, machineries, patents, and investments. And on the other hand, what does mean by liabilities? Liabilities are the debts or the obligation of a person or a company which owes to someone else. For example, expenses, mortgages, IOUs, etc. The author provided very easy to read and straightforward narratives which makes us easy to understand financial concepts. By author gave a simple definition of assets. If the money is coming in, that is asset, and if money is going out, then that is liability. For example, if we buy a house with 100% payment and we rent it out, so monthly we will get rent, so that is asset. And if we buy a AC, so monthly we have to pay electricity bill and annually we have to pay annual maintenance contract. So that is liability. One of the valuable concepts in the book is that idea of creating passive income through investing in assets. Some common cash flows have shown by authors, where how we spend our money define us in which category we belongs. For example, if salary is credited and all the amount goes to expenses, then this cash flow shows us as a poor person or poor people. If salary is credited and that all salary goes through the liabilities and the expenses, those people fall under middle class. And if the amount or the money is invested in assets and that is generating cash flow to pay expenses and liabilities, those people fall under rich category. Author suggests that one should invest in assets that generate cash flow, such as real estate, stocks, bonds, mutual funds, and businesses, rather solely depending on our salaries. The book also covers the obstacles that prevent us to become financially successful. First one is fear. Some people are afraid of losing their money and they avoid to invest. So to overcome this, author suggests one should study or educate themselves to invest or to overcome the fear. Second one is a cynicism. Some people are skeptical about everything. They find excuses to achieve their goals. Cynicism can overcome by positive attitude and surrounding yourself with the supportive people. Third one is the laziness. I can't afford it, it shuts our brain. However, how can I afford it increases or opens up the possibilities. Fourth one is bad habits. Some people have a bad habit of not investing or spending more than the earning. So to overcome this, we have to create a good habit that support our financial planning or financial goals. And fifth one is arrogance. Arrogance makes people to believe what they don't know that is not important. Arrogance can be overcome by being humble and curious and seeking help from the mentors or the experts. My 10 most valuable learnings from the books are: first one is learn to listen. Listening is a good way of learning from others, especially from those who have different narratives or perspectives. Second one is pay yourself first. So whatever you have planned, so pay yourself first and then spend the remaining amount. Third one is reduce your expenses and liabilities. Fourth one is you have to invest in valuable assets. So investing in an asset may create a cash flows that in return you can purchase anything. So fifth one is buy luxuries at the end, not first. So instead you also take the help of your assets. So whatever returns you get from the asset, so you can pay for your luxuries. Sixth one is you become what you study. So you have to read a lot. Seventh one is invest excess cash flow which is generated through assets in purchasing different type of assets like buying mutual funds, stocks, or investing in real estates, etc. Eighth one is be in control over your emotions. Emotional decisions may end up with the purchasing or liabilities. And ninth one is work to learn, don't work to earn. So your money should work for you. And tenth one is surrounding yourself with the people smarter than you. That may help in grow your personal as well as professional career. So I may able to give you some insights of the book. Overall, Rich Dad Poor Dad is a valuable read for those who are looking to improve their financial knowledge and become financially independent. Thanks for watching this video. We'll see you in next video. Thank you.